Bitcoin's price has hit a new high. The digital currency reached $62,600. This surge follows a significant decision by the U.S. Federal Reserve. The Fed announced a 0.5% cut to interest rates. This move has sent ripples throughout the financial world. Bitcoin's price action is just one example of the market's reaction. Many factors are likely contributing to Bitcoin's rise. The Fed's rate cut is seen by some as a sign of weakness in the traditional economy. This perception could be driving investors towards alternative assets like Bitcoin. Bitcoin's limited supply is another attractive feature. The recent surge is a significant development in the cryptocurrency market. It remains to be seen whether this momentum will continue. Before you continue, remember to subscribe to the channel and leave a like on the video if you want to be updated every day on the crypto world, because that's what makes the difference between losing and making money in the markets. So please support our work with a simple free gesture. Thank you very much. The U.S. Federal Reserve's decision to cut interest rates is a major event. This move signals a shift in the Fed's monetary policy. It comes at a time of growing concern about the global economy. The ongoing trade war between the U.S. and China is one factor. Slowing growth in major economies is another concern. The Fed's mandate is to promote stable prices and maximum employment. Lowering interest rates is one way to stimulate economic activity. It makes borrowing cheaper for businesses and consumers. This can lead to increased investment and spending. However, rate cuts also carry risks. One risk is inflation. When money is cheaper to borrow, it can lead to higher prices for goods and services. Another concern is that the Fed is acting out of fear. The rate cut may be seen as a sign that the economy is in worse shape than many believe. The market's reaction to the Fed's rate cut has been mixed. Bitcoin's surge is a clear example of the positive sentiment. Other risk assets like stocks have also seen gains. This suggests that investors are interpreting the rate cut as a positive signal. They may believe that it will boost economic growth and corporate profits. However, not everyone is convinced. Some analysts are urging caution. They point out that rate cuts can sometimes backfire. If they lead to inflation or asset bubbles, they could ultimately harm the economy. The bond market has shown a more muted reaction. Yields on U.S. Treasury bonds have fallen, but not dramatically. This suggests that bond investors are less certain about the long-term implications of the rate cut. The reaction of the U.S. dollar has also been notable. The dollar weakened against other major currencies following the rate cut announcement. This is because lower interest rates generally make a currency less attractive to foreign investors. The market's mixed reaction highlights the uncertainty surrounding the Fed's decision. While Bitcoin's price soars, not everyone is caught up in the euphoria. Some market analysts are advising caution. They point to the risks associated with rapid price movements in the cryptocurrency market. Bitcoin's history is littered with examples of booms and busts. One concern is the use of leverage. Leverage allows traders to amplify their bets. While this can lead to larger profits, it also magnifies losses. A sudden price drop could trigger a cascade of liquidations. This could exacerbate the downward pressure on Bitcoin's price. Another concern is the potential for market manipulation. The cryptocurrency market is still relatively young and unregulated. This makes it vulnerable to manipulation by large players. Analysts are urging investors to be aware of these risks. They advise against investing more than one can afford to lose. It's essential to have a clear investment strategy and to manage risk carefully. Bitcoin at a crossroads, the $62,500 resistance level. Bitcoin's surge to $62,600 has brought it to a critical juncture. The $62,500 level represents a significant resistance zone. This is a price level where selling pressure has historically been strong. If Bitcoin can break through this resistance, it could signal further gains. However, if it fails to break through, a pullback is likely. The $62,500 level is a key psychological level for traders. A break above this level could trigger a wave of buying. Conversely, a failure to break through could lead to profit-taking. Traders who bought Bitcoin at lower prices may be tempted to sell and lock in their gains. This selling pressure could push the price back down. The coming days and weeks will be crucial for Bitcoin. The outcome of the battle at the $62,500 resistance level could determine the direction of the market in the short term. Historical echoes, the stock market and rate cuts. The Fed's rate cut has also sparked debate about its potential impact on the stock market. Historically, stock markets have often responded positively to interest rate cuts. Lower rates can reduce borrowing costs for companies, boosting their profits. This can make stocks more attractive to investors, driving up prices. However, the relationship between interest rates and stock prices is not always straightforward. Other factors, such as economic growth, inflation, and investor sentiment, can also play a role. Some analysts argue that the current bull market in stocks is largely driven by low interest rates. They worry that if rates start to rise, it could lead to a stock market correction. Others believe that the economy is strong enough to withstand higher rates. They argue that the stock market's recent rally is based on solid fundamentals. The Fed's balancing act, conflicting signals about the economy. The Fed's recent rate cut has raised eyebrows. Some observers see it as a sign that the central bank is concerned about the economy. They point to slowing global growth and trade tensions as reasons for caution. The Fed's own statements have been somewhat ambiguous. While acknowledging the risks, the Fed has also maintained that the U.S. economy remains strong. This mixed messaging has left some market participants confused. They are unsure whether the Fed is being overly cautious, or if it knows something that the market doesn't. The Fed's dual mandate to maintain price stability and maximum employment can sometimes lead to conflicting policy goals. Lowering interest rates can stimulate growth and employment. However, it can also lead to inflation if not managed carefully. The Fed is walking a tightrope. It needs to balance the risks of slowing growth with the threat of inflation. The road ahead, anticipating the next Federal Reserve meeting. All eyes are now on the next Federal Reserve meeting. This meeting, scheduled for date of next meeting, will be closely watched by investors and analysts alike. The market will be looking for clues about the Fed's future policy direction. Will the Fed cut rates again? Will it signal a pause in its easing cycle? Or will it surprise the market with a more hawkish stance? The answers to these questions will depend on a variety of factors. These include incoming economic data, inflation readings, and developments in global trade. The Fed will also be mindful of market expectations. Having already cut rates, the Fed will be reluctant to disappoint investors who are expecting further easing. However, it also doesn't want to appear too dovish and risk fueling asset bubbles or inflation. Bitcoin's uncertain future, navigating a shifting landscape. Bitcoin stands at a crossroads. The recent surge to $62,600 has reignited hopes of a new bull market. However, the cryptocurrency remains highly volatile and subject to a range of external factors. The Fed's monetary policy decisions, global economic conditions, and regulatory developments will all play a role in shaping Bitcoin's future. Investors are left to navigate a complex and uncertain landscape. Some believe that Bitcoin is still in the early stages of its adoption curve. They argue that its decentralized nature and limited supply make it an attractive hedge against inflation and economic uncertainty. Others remain skeptical. They point to Bitcoin's history of volatility, its lack of intrinsic value, and the potential for regulatory crackdowns. Only time will tell what the future holds for Bitcoin. One thing is for sure, the ride is likely to be bumpy. Thank you for watching the video all the way to the end. Write us in the comments where you think Bitcoin will come in the short term in your opinion. Remember to subscribe and leave a like to support our work. Thanks, see you tomorrow.